Good afternoon, traders. So welcome back to another episode of Technicals with Tony. Today we have a lot to go through. We're going to be taking a very close look at the S&P 500, so the US stock market. We're also going to go into the US dollar index and the Elliott wave count on how the dollar index is performing. It's tracking very well to our Elliott wave count that we put out over the past couple of weeks. We're also going to take a look at Ethereum. We've made a few minor adjustments to the Ethereum Elliott wave count. And then we'll also take a look at the GBPUSD and the next trading opportunity. So, the Elliott wave analysis that we've been putting out over the past couple of weeks has been tracking very well. So we'll kind of build from there in today's webinar. And we're also going to touch on the SPX, so the S&P 500. So if you're part of our Telegram channel, firstly, I want to just go back and highlight this piece of analysis that we put out. When was it? On the 17th of October. So this was roughly a month ago today. So we were tracking the S&P 500 using 40 bars, which is roughly 57 to 58 days in length. So the S&P 500 was kind of trading in bullish and bearish segments. As we know, the market doesn't move in straight lines, it moves in zigzags. But what you'll find is the S&P was moving down for 40 bars, and then it would have a period of moving higher for 40 bars, and then down for 40 bars, and then higher for 40 bars, and then down for 40 bars. So, this tracked very well down into roughly the 12th, the 13th of October. Since then, since our analysis that we put out, so we was expecting the S&P to turn bullish, and we put this out into our group. Since then, that's been exactly what has happened. So since the reversal down here, we've had a gain on the S&P 500 of roughly 10.5%, which is a pretty big move, all things considered. Okay, so down here, everyone was saying the market was going to keep dumping, and we were actually putting some information out there saying, listen, the S&P 500 has been trading in this kind of cyclical trend within 40 bars between 57 and 60 days, and was expecting a bullish change in trend. So we're next for the S&P 500. So the weaker US dollar last week is really benefiting risk assets, but we don't know whether that's a major market cycle top on the DXY or whether this is just a corrective pullback. If it's just a corrective pullback and the dollar index is going to reverse soon over the next couple of weeks, then we're going to see the S&P 500 begin to roll down to the downside, break these lows, and we're back into bear market territory. Okay. However, CPI data came in under the forecast at 7.7%. It's going to give the Fed some ammunition to ease off of the aggressiveness of the interest rate hikes, which means a possible pivot in the interest rate cycle towards the end of this year, early 2023. If that's the case, the market's going to start to price in a lower interest rate path going into 2023, which means we may kind of break this negative trend line coming through here. Okay, if we break that negative trend line, then a bottom is likely in, and we could be heading for higher highs and higher lows on the S&P 500. All right, so we're not getting too excited just yet on the S&P 500. We need to break the 40 bar cycle. So if we're still making higher highs past Thursday, the 8th of December, then we may consider a major market bottom with the S&P 500 through here. Okay, so that's the S&P 500. Again, in our previous webinar, we also touched on the Australian stock market. I hope some of you guys managed to pick up a win through here. I was stopped out at break even on my position with the trading floor. It came back down, pinched our stop loss at break even before moving higher. So I'll be waiting for the next opportunity. But we've had that kind of pennant breakout. The banks are leading the way to the upside. So the ASX as well is looking pretty good. Just be aware for a pullback before the next move to the upside. Okay, so that's the stock market. Let's take a look at the US dollar index. Okay, the dollar index. So massive dump on the US dollar index last week, coming out the back of the US CPI data. So inflationary data has come down to levels not seen since January earlier this year, down at 7.7%. So there is a strong possibility that inflation has in fact peaked, and that the Federal Reserve may now be able to to ease off of the aggressive interest rate hikes. Okay, so that's resulted in a big correction on the US dollar index. Now, if you remember last week, we were expecting this pullback. We were expecting this large sell-off on the dollar index. So simply put, we were looking for a wave A down through here, or a wave 1, an A, B, C for a wave B, and then coming down through here. Okay, so we had this 1, 2, possibly a 3, 4, 5 coming down through here now. So this is a 3-wave decline so far. We can see that. Okay, so it's only 3 waves, 1, 2, 3 so far. So we may still see an A, B, C through here before going down even further again. Okay. Now, obviously, I'm going to highlight in a second on the pound US dollar that we are looking for another higher high on the GBPUSD. So there is going to be another trading opportunity. We just need to wait for the next setup. Okay. So I think a lot of people get a bit hung up on what's the correct count. Are we going into a wave 3, 4, 5? But really, all you need to be looking to do if you're looking to trade the market is you need to be able to identify either a corrective rally, so either a 1, 2, 3, or a bullish rally, so a 1, 2, 3, 4, 5. That's all you need to do. If we see a corrective rally like we did through here, A, B, C, we can look to go short on the B wave bottom. All right. If we see a 5-wave rally, we can look to go long on the B wave top. Okay, so whether or not this count is correct, we know the dollar's sold off hard. There is a possibility of a topping formation on the DXY now. So if we go to the weekly charts, that's a pretty big top and rejection from the top of this trend line. Okay, so we've got this big trend line resistance coming through here. The market won't make it easy for us, so we could get a corrective rally through here yet, retest, and then we could go down again from there. So it could be a 1 down, A, B, C 2, and then back down for 3, 4, 5. Or this could just be a corrective decline, an A, B, C, and we're going much higher. So yeah, we're not looking to make any big calls just yet. All we know is that there's still yet to be another decline on the DXY. Okay, so we're still waiting for one more low to come. Then we can reassess and see where the dollar index is going to be heading next. All right, guys. So yeah, tracking well so far. I hope you're enjoying the analysis on the DXY. It's performing as expected so far. So the GBPUSD, this is tracking extremely well so far. Let's have a look at the chart that I posted towards the early point of last week, I believe it was. So we were looking at the GBPUSD possibly bottoming around the 1.1142 level. We then tracked it a bit further. We were looking for a pullback, so a wave 1 rally, wave 2 pullback, and then looking to go up into a wave 3, 4, and a 5. We've now kind of had that pullback. Okay, so the 1.1346 level is now our bullish invalidation level. So any move beneath that level, and we can assume that this corrective rally to the upside is over, and the pound will be heading much lower. But we are still looking for a bit further to the upside on the GBPUSD. So that's tracking fairly well. Okay, now we've just had an open today on the pound US dollar. There is a gap here that I'll need to fill. So at some point the pound will need to move above that gap. Okay, to close that gap. However, what this could be like a 1, 2. Then we're going to have a 1, 2, 3, 4, 5 up for the third wave, and then back down for a fourth, then back higher for a fifth. Okay, for a wave 3 or a wave C. So it's a bit high at the moment to buy into. We're not looking to place any positions just yet. We're going to be looking for a corrective pullback through here, A, B, C, and then we could start looking to go long on the B wave top on the GBPUSD. All right. So big sell-off on the dollar index last week. The DXY sunk massively, expecting probably a bit of a rebound over the next couple of days before making the next decision. Okay, so we're looking for a bit of a pullback on the pound before considering taking the next long trade opportunity. So we're seeing higher highs, higher lows through here. So it's in a bullish trend. We've had a breakout of this negative trend line, which we highlighted last week, which is a good sign. Generally, when you get a breakout of these trend lines, the market will want to come back down, retest it, okay, and then begin to move higher from there. So yeah, nothing to be done just yet, team. We'll let you know when we're looking to enter the market. But the GBPUSD tracking very well with this Elliott wave theory at the moment. Okay, traders, let's take a look at the cryptocurrency market. We're going to start on Ethereum. We've been following this for a while. Our Elliott wave count is still valid, although we've had to make a couple of changes, a couple of different adjustments to last week. So, if you watched this webinar last week, you would have known we were looking for a large correction coming through this level down here. So we had this low initially, 1198, as our bullish invalidation level. We had this 5-wave rally to the upside, and we were looking for a big corrective decline through here. So initially we were looking to target the order block around 1360. It smashed through that order block, and we've had to do a bit of a reshuffle of the count, so to speak. So, I know the sentiment in the cryptocurrency market is very negative at the moment with what's happening with FTX. That caused a massive sell-off across the cryptocurrency market. However, I'm going to go through a couple of different technical patterns we're looking at here, just to, help you identify a couple of opportunities, especially on Ethereum. So firstly, Ethereum is yet to break the 880 low back on Friday, late June. Okay, so Bitcoin, other cryptocurrencies, they've all smashed through this level here. So we're still toying with this bullish corrective rally on Ethereum coming through here over the next couple of weeks, because it's still yet to invalidate this analysis. So simply put, 1, 2, 1, 2, 3, 4, 5 for wave 3, 4 up for a 5, wave 1, wave A or wave A. Now this is where we've had to do a bit of a recount. So an A, B, C down for a wave A, an A, B, C for a wave B, and then 5 waves down in here for possibly a wave C, okay, which may complete wave 2 or wave B. So that's an A, a B coming through here, possibly now a C wave coming up. So that's still a possibility. Okay, it's still yet to invalidate the bullish invalidation level, so we're still going to play that. If we take a look at the weekly chart, let me just tidy this all up for a second. Just want to make sure I don't delete anything important. So big bearish candle coming down through here. Okay, now what I do want to kind of highlight is when you get these big breakdowns on, at the bottom of a trend. Okay, so very rarely does the market go, it opens at the same price and then declines straight from there. Okay, you're generally going to get some kind of a retracement coming through here. So, initially I'm going to look to see how this plays out through here. I'm not calling a bottom. I'm not saying we're going to be going higher just yet. We need to let the price action unfold. All I'm saying is that the bullish case here is yet to be invalidated, despite all the negative sentiment that's happening around FTX, despite the sell-off on Bitcoin and other cryptocurrencies. So we're still in with a chance here of Ethereum still moving to the upside until this the 880 level is taken out. I'm still going to play this and trade this kind of setup. So the weekly charts, we may expect to see a bit of a rally to the upside initially, and then we'll see how it goes towards the end of the week. We had a big sell-off on the US dollar last week. Inflation came in well under expected, so that's a good sign for cryptocurrencies, but still early days just yet. Now, what I'm looking for through here, so if we go down to the 4-hourly charts, this appears to be a completed 5 waves down. So 1, 2, 3, 4, 5 down for a wave C. So either that's a wave 1 and we're getting a wave 2 coming through here, and then we're going to be going much deeper for a wave 3, 4 and 5, or this is a wave C and that's completed, and we should get at least an A, B, C correction before we can kind of make a few more judgment calls a bit later in the week. So we need to let the price action unfold on Ethereum for the time being. No big calls. Slightly gutted we missed our short entry last week. That would have been a massive trade for us. So just missed our short entry, but the analysis has been pretty spot on. So we were looking for a decline last week following this 5-wave rally through here. We just had to kind of reshuffle our count. Okay, so this is going to be wave C over here, rather than we were having wave C over here, and that was 5 going up for a bullish wave. We've had to revisit that, and this is now wave C down here. So an A, B, C for a wave A, an A, 3 waves, A, B, C for a wave B, 3 waves. Also, that looks pretty good. And then a 5-wave rally. So that rally through here is corrective now. So that's a wave C. So we're leaning towards an A, B, C wave down. That's now my primary scenario until the bullish invalidation level is taken out. All right. So watching out for, there might be a short-term leverage play you can take in here. If Ethereum breaks above this negative trend line, you might get a rally into that kind of 1440 level. So you might get like an A, B, C, and then we can kind of see whether or not Ethereum wants to roll over for the next leg down, or whether Ethereum wants to set up a 5-wave rally to the upside. Okay. So it's just a waiting game for the time being with the cryptocurrency market. Sometimes you need to sit on your hands, let the price action unfold, and then make a better decision when some obvious price action unfolds in the future. Okay. So we've got a few things we're looking at this week. Let's see how the cryptocurrency market recovers. Let's watch how the GBPUSD and the DXY reacts over the next couple of days, and then we can take a look at possibly getting into the market, possibly come Tuesday, Wednesday. Cheers for now, guys. If there's any charts that you'd like me to take a look at, please drop a comment in the section below.